1 INR is equal to 10 USD. 1 rupee is equal to $10. Yes, I am not drunk, but I am good at quoting the historical exchange rate to you. And whatever I said now is the exchange rate of the year 1925. Since then, rupee started depreciating, and in the year 1947, when India got independence, it reached the stage of equilibrium. There was a parity between the exchange rate of INR and USD. It was equal. 1 INR is equal to 1 USD, like today the exchange rate between Euro and USD. But what happened since then? Why this rupee is failing and why this dollar is getting stronger and stronger and stronger? We will decode all that in this very edition of Knowledgist. Hello and welcome. I am Pravanjan Tripathi and I will decode what is making the rupee fall and what can be done to arrest the slump, or what RBI and the central government is doing to arrest the fall of rupee or to check guard the fall of rupee. If you have not subscribed us yet, kindly subscribe now. There are two global causes or two global incidents that raised the US dollar and made euro, other emerging market currencies fall. That is the supply chain disruption caused by China's zero COVID policy, or you can say recent spike in COVID-19 numbers in China and the Ukraine war. Both these two incidents raised the commodity price across the world, and this is something we could blame for failing Indian currency or any currency for that matter. Though Indian currency is doing better than so many other currencies, even than the euros, right? The second point which I must discuss about the fall of INR is due to the FPIs leaving India. Foreign portfolio investors leaving India in a very rapid pace, and for that we should thank the Fed hike, the Federal Reserve's interest rate hike. The interest rate in US is raised by 75 basis point recently, and there is also an expectation that up to 1%, that means 100 basis point hike is also looming, is also coming soon. So that's why many foreign portfolio investors are shifting to US market. As the US market, the interest rate in US market was low, many foreign portfolio investors were investing in emerging market where interest rate was higher. But in a swift manner, the interest rates in US are rising, and that's why FPIs are leaving India, and close to $15 billion where $15 billion sold out is seen in Indian currency market, Indian stock market by FPIs in this fiscal year so far. And third point, our high import bill. We are a oil importing nation. We import a lot of oil from foreign countries, and the crude oil prices are still above $100 per barrel, $100 per barrel. Our current account deficit are all-time high. It's raising and raising and raising, and our exports are low. These are three main reasons behind the currency fall or the INR fall. So now the time is to discuss what we can do, or what the Reserve Bank of India and the center can do to arrest the rupee slump. First thing they have to keep in mind, or they are doing, or they want to do, is to raise the demand for rupee. How could they do so? They are doing so by selling the dollars from our forex reserves. We were having close to 620 prior to this crisis. We are having $620 billion in our foreign exchange reserve. They have already sold $16 billion of foreign currency, or $16 billion of $16 billion in international market. So what will happen if they sell the dollars from our forex? People will need to pay rupee to buy dollars. So thus the demand for Indian rupee will increase. This is the main reason. This is the main thing that the RBI and center can do, and there is an expectation that India could sell more than $20 billion to arrest the slump. Second, India should do, or India should raise interest rate to attract foreign investment. Also, they have raised the ECB limit, the external commercial borrowing limit. They doubled it so that the foreign investment can come to India, and the effect of the raising ECB limit could be felt in coming days. Third, India could ban some import of some luxury goods, like recently Pakistan, Sri Lanka, Nepal, etc. have done. So India could ban few items from foreign countries. Also, the Reserve Bank of India doing its bit. They have encouraged the trade in INR, like they coined the term globalization of Indian rupee, but that has very less to contribute towards arresting the slump of Indian rupee. Like India is doing trade with Russia and Iran. Both are sanctioned countries as per the CAATSA policy of US. So India is doing trade with them in INR. So this could also lift off the demand for INR. So these are the basic things. Without going into technicals, you can say these are the basic points which RBI and center is doing and can do in future to arrest the slump of INR. Hope the slide of Indian currency will be checked in coming days. For such updates, stay tuned to Knowledgist, India's only dedicated banking lateral entry platform. Thank you again for joining with us. Thank you for your love, support and time. Thank you.